Hey, good morning, everybody. Today is Friday, February 2nd. Yesterday was my son's birthday. So, as I told you guys after the funk on Wednesday, that drop was a buy opportunity, right? Not too short. And I saw people trying to go against the flow. It's not my fault. I also provide you guys the squeeze orders in real time, right? And so what's happening yesterday. As we projected per option book, we closed at 4,905, and after hours you went up to 4,915, right? Perfection. I call this perfection, but it's not me, it's the flow. I have been some hard time today with the thinker swims, not update the spreadsheet. I already called the support and they are checking out what's going on because I don't have too much information about the gamma, the intraday gamma. Okay, you guys, you see a lot of concentration gamma between 4,870 and 4,910, negative gamma, right? But regarding the delta flow, as you can see, 4,925, 4,920 tend to be the Bible region. Worst case scenario, 4,915. Since, 4,910, since is where we start to see negative gamma, okay? And also a lot of negative delta. So by weakness sell rally, that's the pattern when we are in a positive gamma territory. So let's talk about the DX and the GX. I don't care about too much about economic data because the important to me is the flow. If I start to look for the economic data, I start to create bias. And if I start to create bias, my interpretation tends to be wrong. Okay? So what's happened yesterday? I already posted this, but just let's review. The GX jumped from 45.6% up to 49%. So basically, it's a jump of 4%. So dealers was willing to buy the Jeep because that market hold at 4,840. That was a region that we were expected last week, remember, before we break 4,900. We expected 4,840, 4,850 and printed on Wednesday. Was a big buy opportunity. Okay, what's happened? 4% jump in DIX and $2 billion jump in DX. Okay, that's a totally bullish pattern. Doesn't mean that the market cannot drop and close red today. Okay, but dealers was willing to buy yesterday. A lot. Not small hands, but big hands doing the 4% jump in DIX. Okay? Uh, let me move. Let me show over here something else. We are now in a risk on mode. Why I'm saying that? First of all, TNX below 4% in a downtrend, right? And especially DXY show weakness. Also starting a downtrend because started like a uptrend, no directions, and maybe yesterday was a pivot. Let's see how will be the candle formed today. But look at the indicators, especially the MACD is already show a bearish in last, and the ADX plus DMIs, are forming uh, a bearish in last as well. Trix is still trying, to lose the uptrend angle. This is forming like a line, right? And maybe start to going down again. But the fastest indicators is already show us, weakness. And RSI is around 50. So it's not oversold or even overbought. Is in a price. Okay, so we still have space to go down at least back test 101.91. Okay, basically the XY going down, 10 years users going down, market environment is a risk on mode. Okay, we need to be careful. Of course you need to be careful, but I have been telling you guys, the flow is the important thing to us. First of all, graphically, we don't have any weakness so far. Zero weakness so far. The put to call ratio, né, is still higher. Let me put over here, PCC. So the PCC is still higher. So markets have a lot of hedge. I don't know if you are short sellers or poor hedge. So markets usually don't crash when people are hedged. Also yesterday, I show you guys, I told you guys, especially when the Delta minus 1 printed, and I said, guys, this was a sell to buy out of the money call. Why? Because the implied volatility for put show a lot of premiums in put contracts. So it doesn't make sense to buy premium. If you buy premium, you will not be rewarded. Makes sense to sell premium to be rewarded, right? And consequently, I told you guys in real time, guys, this is a time for a squeeze, right? So, of course, that today we have more implied volatilities in call contracts. We have more premiums in call contracts. But in another hand, the market is still hedged. We need to see people all in. We still not seeing that. Okay, we still not seeing that. Anyway, let's go back to the graph that I have been told you guys. I know that you guys like Fibonacci. This is a poor bull fucking shit. This is a mathematics. It's not built for stock market. Then people try to adapt. 99% of the Elliott waivers, the Fibonacci guys, mess a lot because they don't even understand what is the mathematics behind the Fibonacci. Okay, so let's use a very old school graphic analysis that is based in pivots. Okay, let me put like a year graphically, and you guys understand the size of the pivot is formed, and then you guys understand the targets that I'm looking for because we already break them, right? Just see the size of the pivots. If you look for a 1 year graphic, as you are looking for right now, and the cup and handle formed in the monthly graphic, the target is something between 5,685 and 5,716. If you look for 3 months graph, the pivot formed the 3 months graph, the quarterly graph, the target is something nearby 5,215. Also, I want to show you guys a nice pattern, especially in 3 monthly graphic. As soon market, start to backtest the upper line of the bullish band, we will see a big drops, and then of course it's going up. Okay, so all the times in 3 months graph you see a meltdown. So if you check the 3 months graph where the bullish band top line is going and the size of this pivot is already breaking, right? It's already breaking, and now form a new uptrend pivot. This one, the first target is 5,215. Okay, I'm not telling that we will not go in there because 5,700 is according the annual graph. Okay, the annual graph. That's the region that I'm looking for. Let me also go back to one year graph. This parabolic movement tends to be the end of the cycle. Okay, we are in a 100-year cycle already. So usually the last leg of the bull cycle is a parabolic movement. As you guys see, let me put this little small, we never saw parabolic movement before. Especially, we never saw the bullion band wide open as you have been seeing right now. Right? I know that a lot of people doesn't believe in crash. The majority doesn't believe in crash because the majority start to read graphs or play markets, stock at markets, after 2008. Right? The big majority started in 2008, or even had like a father or a parent that worked in the stock market before 2008 and explain, very deep how market works. That's something that I'm trying to explain. Fabio, you really looking for a crash? Yes. In some point from now on, market could be crash. All the risk assets tend to be crash. You guys have been seeing like the 3M report. The 3M report is already projecting a recession. The 3M came to the public and said, I'm expecting a 20% down in my earnings. Hope you guys understand that. 3M is a real economy. Also, banks, insurance companies are laying off. They are projecting also a recession. Nobody, is looking for that. Every single bank, small banks, big insurance companies are laying off. Main Street already know what's going to happen. Wall Street doesn't. Wall Street is poor greed. Okay? In another hand, we have election this year. So it doesn't make any sense prior to have a real view who will be the next president, to not support the market. Market also is used, for election campaign. That's coming easy now for Biden, for example, to say, the market is in all-time high. Your 401k is getting fat. And etc. Right? That's a poor bullshit, but it's how things work. Right? Who you guys think that have been buying a lot? Yes, the Federal Reserve. Who you guys think that who is suppressing the volatility? Of course, that's the Federal Reserve. The Federal Reserve has a trade desk inside the JP Morgan. Before, in the Trump era, was inside the BlackRock, right? And of course, the market is totally, I forgot the word to say anyway, manipulated. The market is totally manipulated. If you check the results, I forgot what was the company. One sunk and another one jumped. Netflix. Netflix, the numbers was worse compared with the last results. And the stock jumped 10%. Makes 0 sense. 0 sense. Right? 0 sense. And I compare with, I guess, the 3M. That the numbers came better, but the conference call, the CEO said a expectation to 20% drop. And the market sunk. The stock sunk 10% at the day. So, tell me, explain me why makes sense to see Netflix with worse numbers going comparing with the last earnings going 11% in a day, and 3M real economy with better numbers but with a perspective to drop 20% in earnings, sunk 10%, doesn't make any sense, right? Because you know the importance of the numbers. The future is just, you know, a prediction by the CEO. Makes sense what I'm saying to you guys, right? So I also hope you guys understand this is a parabolic movement. Parabolic movement means end of the cycle. Yes, I'm expecting a recession because you know they print a lot of money since 2008 and they didn't fix the economy at all, right? They just like a person that have a cancer. We start a chemotherapy, the person start to live well, you know, but in some point when you start the metastasis, you know, the person pass away, right? Because you don't have cure. It's the same of the economy. Since 2008, they start to print money. And since 1980s in Japan, they start to print money. And if you check Japan is in a stagnation since 80s. Look how long Japan is not growing. And they are, you know, Japanese central bank, Japanese people, Japanese economists, they created, you know, the print money machine. All other countries, especially the Federal Reserve, start to copy, and it started back in 2008. So Japan is a very good reference because they start to print money in the 80s and they still in a stagnant inflation. This is going to happen in the United States? I don't know. We don't know. But usually it's an economy that recovers faster. Because in the United States, basically, it's not a product. They don't sell a product. They sell money. That's, you know, where people consume. That's, you know, people just, you know, circulate a lot of money every single day. So usually people prefer to invest in the United States of America. Consequently, the economy in the United States of America recovers faster than other places. But it also doesn't mean that you see a stagnant inflation in the United States for 5, 6, or 10 years, as you saw back in 2029. Nobody knows how big is the problem, and nobody knows how long it takes to fix the problem. If you compare, you know, the current situation with back in 2008, market crashed when Lehman Brothers, you know, failed. How many regional banks failed so far? More than 10. And markets went straight up. Makes sense? No, right? No sense. But they, in 2008, create a formula to print money. And every time that you see a regional bank fail, you see markets going up because the balance sheet of the Federal Reserve is also going up. No sense, right? So basically what they have been doing is postponing the problem. For sure, they doesn't know the problem either, where it is and how to fix it. They never know. They are always reactive and not proactive. Because behind them, they have the politics and they have the big corporation that need free money to survive, a bunch of them. Okay? But anyway, an asset that, you know, I'm really bullish and I have been telling you guys a lot about it. Of course, that have much more risk, more reward. That's Bitcoin, because the Bitcoin even backtests the pivot. Totally different, you know, than SP500. The big pivot is over here. Okay? So, okay, yes, at 49, we back test, but we went back down. Compare with SP500, SP500 is already break and trading break above the pivot. So, Bitcoin is totally delayed the movement. It's totally delayed the movement, right? Bitcoin is supposed to be trading at least at 46,211. At least. I mean, correct thing is to be above. And is not above. Right? So the same size of the pivot is doing, a graphical analysis based on the pivot in a break up of the pivot. Okay, I have two targets. One is 86,000 and another one, I also highlight over here, the big short is 110,000. That's, I'm looking for a possible backtest on those two ranges because the size of the pivot. Okay, we didn't break this one, but in the annual graph, we already formed a pivot. Okay, that's this candle. Okay, consequently, I have been saying Bitcoin is really, really delayed and totally normal because the halving, I guess, starts in April, and usually the Bitcoin spike after the halving. Okay, because it's lack of liquidity, and is where dealers start to make to melt this up. Usually, it's what's happened, and you see a parabolic movement like we have been seeing in stock markets nowadays. Okay. As I said, now is the spreadsheet is being updated. So note that you have, let's consider a call wall, a gamma wall at 4,945. And so far we have a negative delta in that region. That's a good setup to see a breakout. That's a really good setup to see a breakout. But, you need to look for the supports. And also, if you check the future, especially intraday 60 minutes, we already are overbought. So a meltdown to backtest at least EMA 20, and bring the RSI back to 50, that's a good setup also to burn call deltas, especially the call now has a higher implied volatility, to burn out the premium to see another spike. Okay, that's totally normal to see a pullback. So per deltas, looks like that between 4,925, 4,920 supposed to be viable. And the worst case scenario, 4,910. Why? Because 4,910 is where we start to have negative gamma and negative delta. Means weakness, right? Weakness. And what's the pattern of positive gamma territory? Buy weakness and sell strength. So far we have strength, let's use the gamma at 4,945. So totally normal if you go up to there to see a meltdown, 30 points, 20 points, whatever. Then to burn all the call deltas, especially because you have higher implied volatility in call contracts comparing with put contracts, right? To burn out the premium, to burn out the deltas, to check a viable region to buy and melt up again. Okay? So that's, something that you could see during the intraday. Okay? So that's what I'm looking for. Worst case scenario, 4,910, but usually a viable region between 4,920 and 4,925. Could you be a trap? As I said, yes, could you be a trap? Because you have important data that will be delivered soon. But DXY and TNX is still showing us a risk on mode. Take care, guys. Enjoy the day.